Hey traders, hope you're all doing well. It is Wednesday, August 21st, and obviously all finished for the day, just out here chilling by the pool, relaxing, enjoying my life. And I just wanted to make this real quick video to talk about today's Amazon trade. And I traded a number of things today. I traded AMD, Amazon, Meta, and SPY. So I actually broke my own rule. I know I've said never ever trade more than 3 tickers on the same day. And yes, I traded 4 tickers today. So I broke my own rule. So that's not a good thing, but it worked for me today. I was just seeing some things, and the things that I saw made me think I can actually trade all 4 of these today, and it ended up working out. But still, I would highly suggest you do not do that. Try to trade like 1 or 2 or absolute maximum 3 tickers each day. But anyway, so today I'm going to show you my P&L, 19.5% P&L on the day, made about $750 on AMD, 747 on Amazon, and $325 on Meta, and $70 on SPY today. So I'm not sure exactly what that adds up to, but it was definitely a nice day today. But anyway, the reason for this video is to talk about specifically the Amazon trade. What did I see this morning, and why did I trade it? And I want to be quick with this because I feel like it's a similar pattern of things that I've talked to over and over on this channel, but I really want to hit home the idea of just how important looking at your pre-market technical analysis with the price action, and then seeing where price is in relation to the 200 EMA, and then making your moves in the morning based on what price does in relation to the 200 EMA, because it happens over and over and over again, practically every single day. There's at least one of my trades where the 200 EMA has a very significant role in what I decide to do. And that's exactly what happened today on Amazon. And so I'm going to get into a screen share here in a minute. I'm going to explain exactly what I saw, why I traded it the way that I traded it based on what I saw. So let's go ahead and get into the screen share right now. Okay, so here we are taking a look at the Amazon chart. I'm looking at the daily chart right now. And as I just said in the intro, I traded 4 different tickers today, which is more than I like to trade. But I did see all of them setting up in a certain way that, gave me the confidence to take all 4 of those trades. But the thing that I want to focus on is Amazon, simply because this one had sort of the most textbook example today of what I like to see and what I like to look for, and it just worked out so nicely that it was really easy. So whenever something is this easy, I definitely want to point it out so that you can hopefully take advantage of that type of easy price action when you see it yourself. So here we are looking at the daily chart on Amazon. This is today. You see this fairly long upper wick, meaning that we did have a range close to the beginning of the day where we reached high of day. We still closed above where we opened up, but we closed a little bit short of the high of day. This right here is yesterday. So this is 8:20. This is today, 8:21. So basically, you're looking at a really nice upwards trajectory this week. This was Friday of last week. We had Monday, Tuesday, and today. So far, all this week has been on an upwards trajectory. You look at the RSI below, we can see the RSI is trending upwards. We can see that the MACD is trending in the right direction to go long. You can see that the Chaikin oscillator is trending upwards. So, everything is looking good as far as these lower indicators is concerned. And then what I really noticed is the fastest moving EMA on the alligator basically came down and just pretty much touched the 200, and then yesterday bounced off of it and started up again. And then we see today that the fastest moving line on the alligators crossed over the middle line on the alligators. So, you've got the lips and the teeth and the jaw. And basically this was a crossover that started yesterday and then sort of continued today, which was good. But next, let's go into pre-market. So this was the entirety of today. This was overnight. This is last night. And then this is pre-market this morning. So what do you notice? You immediately notice fairly large gap up. This is where we closed last night. This is where we opened today. So really big gap up. Whenever I see a gap up and price is above the 200 EMA, then for me, the 200 EMA becomes a very, very important support level, because one of two things is going to happen at the open. We're either going to basically fill the gap and erase all of the overnight move that was made, or it's going to take a little breather and then it's going to continue in the direction that it was going. So that would be called a continuation of the gap. So you either fill the gap or you continue with the gap. And so, one of those two things is going to happen. And so since I knew that, I was paying extra close attention to the 200 this morning. And if I zoom in a little bit more right on the beginning of the day, you can see here we are just, in the few minutes before the open. We come down and we just literally straddle the 200 right before the open. And then first minute of the day, we pop up and, shoot up above the 50. And then we come down and we basically bounce off of the 50, come up, bounce off of the 50 once again, just keep riding it upwards, bouncing off the 50, which is above the 200. So all of that is a really, really good sign if you're looking to go long, which is what I did today. I basically waited 1 minute. This was minute number one. I wanted to, wait to see what happened for just a few seconds. Normally I like to wait a little bit longer, but today, because of what I just explained, where price was, the fact that we had gapped, the price, is basically straddling the 200. Now you can have your best practices, and you should have best practices, but there's always a time to make an exception to the rule. So my general rule is always wait about 5 minutes or 10 minutes to get in, but sometimes I'll see a certain thing happen that's the exception to the rule. And today, for the reasons I just explained, when we bounced right off of this 200 in the first minute, that was the exception to the rule that made me say at 8:31 I could feel comfortable getting in. So I got in pretty much at the beginning of this candle. We closed a lot higher. I added in a couple minutes later. Certainly didn't close anything right here. This is no reason to get scared simply because you see a couple of red candles right after your big green candle where you opened your position. And right here, I actually added in because we see this green candle engulf this red candle. And, I added in right here, added in again on this candle. Then I closed a couple of contracts right here, stayed in, closed a couple contracts right here. And then this was my last period of adding in right here on these two. I added in, and then I closed out as we were riding up, and I closed my last contract right about here, like right in this area between like 9 o'clock and 9:03. So, essentially I did the entire thing in 30 minutes this morning. And this is just one of my trades that I did. And you see how easy this can be when you're just paying attention to price action and the candlesticks and where the candlesticks are in relation to your most important indicators. And, then especially right here in this sort of area, we see the alligators start to open up. That's definitely what we want to see. We want to see a nice opened up alligator in whichever direction we're going. In this case, I'm going long, so I want to see the shortest period over the medium period, which is over the longest period. So it's just a textbook example of my strategy of identifying a trend, picking your perfect entries and exits like a sniper, getting in and out, not getting scared, not getting greedy. I wasn't greedy. I didn't think, oh, this is going to go all day long. I'm just going to hold on to all my contracts and just make a ton more money. So we can see if I had done that, that would have been very bad for me. I would have had about another 3 to 4 minutes of extra gains that I could have maybe squeezed out of this. And then at this point right here at 9:08, it's essentially all downhill from there for the rest of the day. It does come back a little bit towards the end of the day, but that's besides the point. I mean, what you want is you want to get in and out quickly with as much profit as you can possibly get. And so that's why I like to say that 90% of my positions are going to be open and closed between like 30 minutes and 1 hour of the beginning of the day, because I've found that that's simply what works the best for me time after time. Okay, I hope you enjoyed that little mini lesson. Once again, the 200 EMA is where it's at. I mean, if you're looking at price action and you're anywhere close to the 200 EMA on your price action, just make your moves based on whether the level holds or whether it breaks the level and then goes in the opposite direction. I mean, more often than not, you're going to be right when you play it that way. So pretty simple. It's what I do every single day. So if you want to get my course, you know where to find it, lonewolftradingclub.com, or you can get one of my 2 books or both of my books. They're available on Amazon.com, Secrets of the Lone Wolf Trader and The Lone Wolf Trader Presents Mastering the Mental Game. So until next time, I hope you're having a good week, and I hope you continue to close out the week strong. So see you soon. Bye-bye.